would government oversight of cryptocurrency mean for the industry, for you, for me? Well, here to explain is Doug Flynn, certified financial planner and co-founder of Flynn Capital Management. Nice to see you this Saturday morning. Welcome, Doug.
Good morning, Hannah. How are you?
Great. So we just heard Robert's reporting on a potential crypto czar. What is the state of regulation when it comes to crypto right now? How might this role change the regulation in our country?
Well, the Securities and Exchange Commission, which regulates securities, has called this an unregulated security, an unregistered security. So there's that issue. And then there's another governing body, which is called the CFTC, that deals with like gold and other commodities. And they're sort of taking some ownership on the trading aspect of it. So this is part of the problem, is it's not as clear as other securities. And I think that's what the czar or administrative position, whatever they're going to do, would help to do, would get some clarity on exactly what the rules are. And then you could get some wider adoption to institutions, because then everyone would know how to play it. So that's where we're going.
So Doug, when it comes to crypto regulation, how does it stack up against the more traditional financial products that we're used to? And how would more regulation affect consumers?
Yeah, so I mean, if you do get some regulations, one of the things that would happen with that strategic Bitcoin reserve that the president wants to implement is that you would then end up with a stockpile of Bitcoin. And so in massive sales, because it's a highly volatile asset, that would create some support and reduce some of the sell pressure. It also would enable some legislation to be enacted to protect consumers. You might have heard stories of people who forgot their password, lost access to their millions of dollars of crypto and whatever it may be. You'd get some consumer protections. Right now, it really is the Wild West out there to a degree. It's moved a little bit forward because there's some securities now that are traded, like ETFs and whatnot, that trade on the price of Bitcoin and other crypto. And so that's regulated by the SEC in itself. But there needs to be a finishing of exactly what it is, how do they want to regulate it, and that would really help consumers and reduce some of that volatility that happens there.
We do have to talk about the price of Bitcoin. It is on the rise since Trump won, nearly $100,000, up 40% since Election Day. Look at that graph, yeah. Quite the jump. Why do you think that's happening? Is it simply because Trump is bullish on crypto?
Well, I think the current SEC chairman, who's announced very recently that he's going to step down on January 20th, was known out there as not really a friend to crypto and it sort of fought this adoption. And so one of the things that Trump said was he was going to immediately get rid of that SEC chairman, who's already decided to step down. So appointing someone who's more crypto friendly, getting those laws in place that really the wide adoption, and some things like this, like if we do have a U.S. strategic Bitcoin reserve, and supposedly Trump wants to get tax-free transactions for U.S.-based crypto, that would be unbelievable, and that isn't the case right now. So I think there's a lot of demand there. Also, you have issues that if the U.S. dollar weakens, inflation picks back up, those kinds of things in the backdrop economically lend itself very well to a currency like this, if you will, that's not tied to any direct government. So I think all of that plus the wind at your back is really what has picked up here, and that's why it's up over 100% year to date, really. Incredible.
I have less than a minute, Doug. I have to ask you, you're a financial planner. What are the biggest crypto-related concerns you have, or you're hearing from your clients?
You really have to understand the volatility. So for most people, I mean, with the younger people, they tend to go all in, and so that's anytime you go that heavy into something, that can work really well for you, or it can work against you. You also have to be very conscious of the short-term trading. That's ordinary income taxes, so less than a year. With the wider clients and older clients, it really does need to be an important part of your portfolio, and we're recommending 3 to 5% is a very reasonable number that you should have in there as part of you. If you don't have any, it does make sense. You just have to know the volatility. There might be opportunities to pick it up a little bit cheaper with that volatility, but building some position in there does make sense from a diversification standpoint.
Okay.
So that's why we like it, yeah.
Very interesting. Doug Flynn, thank you so much for joining.
Happy to be here.
Thanks for watching. Go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.